Hey, what's up guys? Brandon here. I get asked a lot. We talk a lot about just, the market going down, going sideways, recessions, all these good things, but what are some ways to hedge against threats of that? And, we talked a little bit about insurance the other day and different stuff in that regard, but what is a good way to protect against threats of the economy going down? And vast majority of people are invested in the stock market and some type of paper assets, equity assets, sometimes maybe debt like the bond market. But what are some good ways to hedge against that? Well, gold and silver, hedge against that. It's money insurance. It's insurance on the currency you have. Gold and silver is true money. That's a hedge. Real estate is a hedge. It's a hedge against the dollar. It's shorting the dollar. All these are short positions. You're shorting the dollar because you don't trust in the American government, you don't trust in governments, you don't trust in fiat currency, you don't trust in the currencies, fiat currency staying, because every fiat currency in the history of the world has a 100% failure rate. You heard that right. Every fiat currency in the world, in human history, has failed. All of them, 100% failure rate. So, do we think the US dollar is any different? Are we better, in that regard than everyone else? We have the same. The currency, just because it's the American dollar doesn't mean it's any different. It's the same. All dollars are all fiat currencies, so they're all the exact same. So, two other ways are crypto. Crypto is a hedge. It's more speculative, but it is a hedge. It's shorting the dollar. You're betting that the money, your currency won't do as well in the stock market. It'll do better with crypto. It's going to have more gains there. So you're hedging and shorting the dollar there. The last play is in stocks, but it's giving yourself insurance. It's stock options, the puts, calls, straddles, any type of short position there. You're shorting the dollar there, giving yourself insurance. And I'm not talking just, investing in Apple and just, putting some money in and buying some shares of Apple or your 401k, IRA, stuff like that. That's just savings. Those are just savings. That's not investing. That is strictly savings in the stock market. So it's tied to the stock market, but you're not making money like Warren Buffett does, for instance. He is shorting stocks. He's doing things, he's buying insurance and stock options. That way, when the market goes down, he still makes money. Or if it goes down too much, it automatically pops him out of the market and he's on to invest in other things. So those are a couple different ways, like I said, to short the market and hedge yourself against down times, hedge yourself against the dollar. Crypto, real estate, stock options, gold and silver. So hopefully you got something out of that. It's the Q&A, the macro Q&A for today. It's a question I get asked a lot: what to do. What do you do in case of economic catastrophe, collapse, sideways trend, downward trend, anything that's not optimal, anything that's not straight up, right? So hopefully you got something out of that. Let me know what questions you have, what your thoughts are on that, and would love to hear them. And I appreciate your time and energy because it's the most important thing we have. We'll see you guys soon.